Hello and welcome to another Switzer CEO Masterclass, and today we're talking to Michael Davidson, who's the CEO of Propell Holdings. That's ticker code PHL. And remember, this is an information or education video about the company, what it does, and what are the prospects of the company, how it's been performing. And so without any further ado, let's cross and talk to Michael Davidson. Michael, thanks for joining us.
Thank you. Thanks for having me.
Okay, Mike, for people who watch this who don't know anything about Propell Holdings, that's the ticker code PHL, tell us exactly what you do.
Yeah, look, we're the only multi-product financial services platform targeted exclusively at Australian small businesses, and importantly, I guess, addressing all of their needs in one simple app. So we help them, we essentially help, and look, most people are probably aware, but there's millions of these small businesses in Australia, about 2.3 actually, and they really struggle to solve their finance needs for a bunch of different reasons, which I can talk about later, but they find it difficult to solve the need, and we've pulled together a range of those products into one place they can sign up for really quickly, really simply, and solve their need now and then into the future.
So by having the app, are you saying that a small business operator could use the app and see a big range of potential lenders to a business like they might own?
No, it's different to that. We're not a marketplace for loans or different finance products. What we've done, we after dealing with these small businesses for a number of years now, what we've found is most important is that they're actually, and this is what they've told us and also what we see in their actions, they need to solve their finance needs. And I'll go into that in a second, how we actually do it, but they need to solve the needs. And what is important to them is simplicity and access, not so much range or a range of options and price. And what I mean by that is, they struggle to manage their cash flow. They generally have really limited specific financial knowledge. So, they're great at what they do, but they don't have a finance team to guide what products and so on they should be using. And they've historically really struggled to get access to the finance products that they need. So what we've done is take a best of breed approach on bringing the individual products onto one platform that they can then access and utilize. So we do everything from lending, we do shorter and long-term lines of credit, so we give them access to capital. We've also brought on payments so they can get paid more quickly and get money in their account, and it's a full suite payment service. And we've also launched late last year an insights product or an insights feature on the platform that gives them deep insights into their credit score, both individually and also for their business, but also an insight into how cash moves through their organization. So everything from where they get their revenue from through to where they actually spend it, and some deeper insights into what they should take out of that. So really, they're coming to us generally for a burning need, and quite often that'll be payments or lending. They come onto the platform it's 5 minutes, entirely digital process. When they come on, we solve that need for them immediately, and then we also help them solve more of their needs moving forward.
Okay, give us an example of how someone who may well have a great business idea like yours, and they need to market it, and that they may well not want to go to a bank, or they might have tried a bank and the bank just didn't see the vision of what they saw. How would your app actually help them?
Yeah, so I often talk about, we have a case study for a small plumbing company. So they've maybe up to about 5 members in the team. They've just secured a large job. They need to fund that, whether it's buying stock or something. So that essentially then they have that burning need. They may not have really strong back-end processes. They may not be able to access capital from the banks and traditional providers. So they're looking around. They find Propell. They go through our sign-up process, which, as I mentioned, is extraordinarily simple in comparison to what they're used to. They enter their details, again, in about 5 minutes. And through that process, we do and are able to do a full assessment of the individual. And it's through all of that know your customer piece, right through to assessing the financials of that business on a cash flow basis. And at the end of that, we're able to give them a conditional approval on that finance product. So they're able to then access funds that day, often within an hour or so, to solve that individual need. Now, if you compare that to a process they're used to, as you mentioned, maybe they, in most cases, at the smaller end of SME, they're actually not able to access finance from banks and traditional financial institutions. So that is a huge difference. But additionally, the process with Propell, I mean, you're talking 5 to 10 minutes as an application, where it is days and weeks with the traditional providers, and they just don't have the time to do it. I guess there is a huge difference.
Go on. But do you need to access their bookkeeping records, in the age of zero and MYOB and whatever? Do you need to see that to at least make an assessment about whether they're going to be a good risk or not?
No, we don't actually. So there's two pieces. Firstly, our funding currently is unsecured. So we don't need to take security over their business or their house or any piece, which is a real positive for this segment of the market. But importantly, the way the lending model that we've developed over many years, and it's now been proven, is that we actually do how cash flows through their business. And again, looking at that coupled with the credit levels of the directors and the business gives us actually a much more accurate view as to their capability of funding and repaying a loan. So we don't need to connect to financials or have them send us business plans or any of that piece. We get a really deep understanding of that individual business, and also we can compare it against the thousands of customers that are on the platform to get a view to what they're capable of repaying. And it's probably a really important point there, is that our entire lending model is aimed at ensuring that we're able to support those small businesses, but support that they're capable of repaying any funding that they're seeking.
Yeah. I guess the bottom line then must be that the interest rate they're paying is going to be slightly higher because you're not jumping through all the hoops that banks would make you jump through. You guys are taking an element of risk on your assessment system. So can you give us a range of what kind of interest rates are involved?
Yeah, so it varies depending on the type of loan. So we do 6 and 12-month lines of credit currently, and then also, to your point, the type of business. So it ranges anywhere from 1%, and we do fees per month, so 1% per month, right through to higher fees in the 5 to 6% per month, dependent entirely on the business and their history. Yeah, so very comparative for this segment of the market. Yeah. Interestingly, we're actually, and this is just for news that's coming, we've been talking about it quite a bit recently, we have a number of additional products that we're bringing onto the platform to solve more of their needs across a range, but specifically on the lending side, we'll be moving into equipment and asset secured finance, because any given business needs a range of products to solve their needs, not just specifically one. And in a lot of cases, we will be able to offer lower rates for those secured equipment type finance options.
And I guess you benchmark yourself off the other non-bank lenders in the market. And we know historically they're higher than banks because they are more flexible in their lending arrangements.
Yeah, absolutely. And that is very clear that the options historically for the smaller end of the SME market have been extraordinarily limited, and a lot of pages have been written about how they struggle to access funds. So there is this segment that do need it, and we do charge more for that group, but they're also equally really willing and able to cover that to help support their operation and growth.
Yeah, now, Mike, you guys
we do benchmark very closely to any of the lenders.
Okay, and you guys are going for a capital raise at the moment, is that right?
Yeah, we are. So we've just recently successfully completed a placement. We're in the process right now of doing an entitlement offer to the existing shareholders.
Okay. And so what's the money going to be used for?
Yeah, it's so we've seen really significant growth in the business, both from a customer point of view. So the customers on platform, we've grown from an IPO 12 months ago of around 300 to more than 1,700 at the end of March. We're on track to hit about 3,500 by the end of the year. And we've been growing at 30% quarter on quarter for more than 5 quarters in a row. Associated with that, we've also seen really significant growth in our lending. We're over 200% increase last quarter. Now, to continue to support the growth, we've needed to increase the size of our wholesale facility on our loan book. So it will go to support further increases in the wholesale facility, further increases also, and continued development to the platform. And it's something we talk about a lot. You know, our product and experience for our customers is extraordinary. It's entirely digital, but also very personalized and automated, so that it's something you can only deliver a 5-minute application process with conditional approval, with significant development behind the scenes. So there will be funds that will be allocated to continuing to develop the platform. But really importantly, quite a big chunk will go to bringing more products onto the platform, which we then can sell into and provide to that existing base, which will deliver, essentially really, really fast usage and then revenue.
Michael, how do you marry up, maybe the success of your marketing program with your need for funds? Because that's like, if you have a spectacular marketing idea which works really well, you then instantaneously need more funding. Do you have multiple sources of funding?
So there's a combination. So there's funding for the business, and then there's funding for the loan book, and they really operate separately. So there's probably 2 pieces to it. We have a really tight focus and have been working really hard on the cost to acquire a customer. It's something that's very important for our type of business. We've been able to drive that down substantially over the last 12 months. And that is an ongoing program, and you'll continue to do it forever. So we've historically worked almost exclusively through digital channels, but we are now branching out into offline and partnerships. So we're able to get to much larger groups with the same or less funding. So I'd say there's that piece around continuing to grow. And then the second piece is around how do you fund the loan book and continued lending of the existing products, but also other products. And that's where we're working on, we recently announced that we had doubled the size of our wholesale facility. We're currently working on extending that further to support the growth into the coming 12 months to 2 years.
Okay. So, if you look at the progress of the business, the numbers show that you are progressing. But of course, you're having to deal with the fact that all tech companies have been slammed, whether they're good or not. Is it tough being the CEO of a company that you feel as though the market is being unfair to your company, as it's unfair to all tech companies at the moment?
Yeah, look, I'd say, we take it with a grain of salt. There are things that we can control and there are things that we can't. The share price is one of those, and just going through, we're going through pretty extraordinary times globally and with the market. So, whilst I may have personal views about where it should be, myself and the team are exclusively focused on making sure that we deliver the best possible product to those small businesses, because they are ramping up. Even with this uncertainty, 2022 has seen a really fast start, and anecdotally and also through their actions, we're seeing that continuing. So I guess, yes, it is disappointing, but at the same time, if we keep doing the job, and we are, then that will correct over time.
And have you been helped by the fact that, the stories coming out of the banking sector are that they haven't been actually lending a lot to business, and therefore I presume SMEs are looking at alternatives that they wouldn't have looked at maybe 10, 15 years ago?
Absolutely, they are. Yeah, and they're looking at it for the reasons that you mentioned, that the banks haven't serviced them before. But actually, more and more we're finding, and this is probably one of the pieces I'm most excited about, is that we're able to deliver an experience that the modern consumer and the modern small business owner is looking for that the banks aren't able to do, because it's technically quite difficult, and the banks are built on tech stacks that are now quite old. So to implement new experiences, new digital experiences that the consumers and the customers are absolutely demanding now is difficult and really, really expensive. And we've seen that with a number of banks that have tried to roll out initiatives. So it's probably part that they're not served and part that they're not able to get the Propell style experience elsewhere.
Okay, Michael, thanks for joining us.
Thanks, Peter.
And that was Michael Davidson, the CEO of Propell Holdings. And remember, this is an education video meant to open your eyes to what's going on in a listed company. And I wish you lots of luck in the future. Of course, if you decide to invest, make sure you talk to someone who can give you objective advice about that investment. Thanks for joining us. I'm Peter Switzer.